Good morning. I'm Vince Lancy. This is the Gold Fix Market Rundown. Today we'll be discussing Deutsche Bank's analysis of gold's reaction in crisis and how it varies greatly. Thailand targets gold speculators, some oil news, and we have a Bitcoin trade we want to talk about in premium. So stay with us. There's the home page. First, the markets. 10-year yields are up 2. The dollar is 98.84, down 22.23. The S&P 500 is 68.29, up 24. The Nasdaq is 24,789, up 121. The VIX is 22.93, down 57. Gold is up over $100, $101, trading 51.90. That's $200 off the lows approximately. Silver's trading 85.95, essentially $86, up almost $2. That is $6 off the lows, maybe $7 off the lows. Traded in the 79s yesterday. WTI is 74.94, up 4 cents. Natural gas is 3.19, down 3 cents and change. Platinum is up 80, 86. Palladium is up 52. Gold, silver is down a little bit, trading at 60 now. Grains are mixed with soybeans bucking the trend up. Bitcoin is trading 71,000 and change. We like Bitcoin if that matters to any of you today. So looking at the board very quickly, hard to quantify what's happening today, except that it's a reaction to yesterday. Yesterday, everything got overdone to one extent or another, and so the market is correcting itself today, with exception to the bond market. The bond market just is not doing very well during this stagflationary environment. Sent out this morning, and we'll be discussing that in the premium section today. Gold's reaction in crisis varies greatly. Gold's geopolitical premium is far less reliable than most investors assume, but one technical signal right now suggests the metal may still be quietly, I don't think it's so quiet, strengthening beneath the surface. So historical data shows gold's reaction to geopolitical crisis usually develops over 1 to 2 weeks and varies widely across events, with frequent early drawdowns. Silver typically moves alongside gold. The more meaningful signal currently is gold's positive crossover versus US dollar implied fair value, indicating resilience even as the dollar strengthens. Okay, in English. If you go back throughout history, and I mean history, let's say starting with the Iran crisis in the 70s, gold is very, very pronounced difference between what it does in the first 2 weeks and what it does in the first 3 months. And having traded through many of those, I'm going to give you some pointed observations that dovetail what Deutsche Bank is talking about with what Hartnett talked about 2 weeks ago with what we've seen over the years. And that simply is this. Deutsche Bank is right. The sum total of the data varies widely. However, there is a before and after moment in how gold operates, and we'll get into that in a little bit. Next story. Bank of Thailand. Thailand is targeting gold speculators. Thailand just capped retail gold trading because policymakers believe gold speculation is pushing the baht higher and damaging the country's export competitiveness. The reality is every country in the BRICS and pretty much on Earth is restricting gold sales outside of the country. And so this is just what they're doing. This is their version of controlling gold supply. Every country is getting ready to use gold for something, whether it be repo or HQLA or both, or a gold BRICS currency, doesn't matter. But every country has its own pretense for doing what it wants to do. There's the news and analysis. Making sense of today. That was yesterday's market broadcast. That was the most downloaded broadcast we've ever done. We're very grateful and proud of that as well, considering the circumstances. So thank you very much for that. Before we talk about yesterday's activity, the data on deck today, Wednesday, ADP employment, S&P final U.S. services, and the ISM services for the beige book. Again, Friday is the jobs number this week. Before we turn to the gold and silver charts, I had mentioned that there was news yesterday in oil. The news that's keeping a lid on things now in oil is, not surprisingly, coming out of the Trump administration, where They say they want to backstop the insurance for tankers and also consider putting military escorts on them, which, by the way, if you're a listener, that's corporatism. The United States is escorting, I mean, it's a lot of things, but the United States is basically saying we're going to pay for your insurance, which is what you do when you're in a corporatist environment. You're not free market oriented right now. And we're going to put military escort on it. So I can imagine that whatever we're going to do to Iran, we're going to be pretty big and decisive. And at least the market is starting to look at it that way because oil is still strong, trading $75, but it backed off the highs on that news. And gold kind of bounced off the lows on that news. It's almost like we're daring them to blow up a tanker now. But effectively, versus there's no authority to close the strait, but effectively the Hormuz Strait has been closed because if you're concerned about being blown up, well, your crew doesn't want to go in there. Your insurance company doesn't want to insure you, and the guy who's making the oil up in the Gulf, he doesn't want to mess around with that. So he's going to ignore the Hormuz Strait and go over pipelines and go to the Red Sea. So you don't have to close the strait to close the strait. The free market is closing it for you. And we're now looking at about, it looks like almost 2 months worth of stoppage the market is discounting. So anything that happens between now and the next 2 months that shortchanges it, meaning that this will resolve quicker, will be bearish for oil and gold as well. Okay, so there's gold. Now I want to explain, or at least describe here, this is algorithmic buying. It may not look like an algorithm, but it's creating a trend line. It gets away, it comes back, it gets away, it comes back. This is the buying. The buying is probably all in here, and there's someone capping it, selling it on a market maker algorithm. This is a market maker algorithm. This is the market getting away from them. This is the market getting fixed with the magical UBS problem. And this is the market getting fixed again, but it's back to trend. Now, the thing I'll say that's bullish about gold, and I can be very bullish about gold right now, is this. This is the buyer, and this is the buyer coming in at a steeper angle. So the buyer is getting less patient. Now, mind you, he's not buying it lower. He's buying it above his old trend. So does that mean we're going to go up? Yeah, it probably does. But without getting married to that first, it means that you have a guy out there who's literally in front of an algorithm going like this. I want to buy gold, and he hits a switch, and the algorithm starts to do its work, right? And then the market runs away, and it says, "Okay, I'm done. I'm not going to do this. I'll wait for it to come back to me." And then it comes back by hook or by crook. It comes back, and then he says, "Okay, it's stable now," and he turns the algorithm on, and the algorithm starts buying again. If it runs away, he gets out. Now, if there's another bearish news item, he's going to turn the algorithm off and let the market settle down, and then he'll turn it back on. But that's literally how it works. There's like literally a light switch that gets turned on these things. And this is, something that's been operating every day for a long time. And don't forget, central banks and Tether are buying the shit out of this. This is not over by any means. And we're going to get into what war means for gold historically, as well as through Hartnett's lens and the Deutsche Bank lens in a little bit. Now, silver's a little bit different. Silver, there's your trend. I think that's an algo. I'm not really sure. Let's just say there's an algo involved. It gets away, it gets corrected. Now they come back buying again, but notice it's not at a steeper incline. It's at the same incline. So basically, silver is the same buyer, but he's not as aggressive. Okay, which is consistent with what's been going on in silver. So there's nothing really mysterious about what is going on. If you've been through the ringer once or twice with it. The next up is the premium section. We'll start with Bitcoin, and then we'll talk about the Deutsche Bank report in context of other analysis. So premium section starting now. Okay. All right, so here's Bitcoin. There's a signal system that I use called VBS, volatility-based system. Not very creative name, but that's what it is. All right, excuse me. So VBS, essentially, all it says is that when a market goes sideways for a time period, there will be a contraction of volatility, and the volatility will then give you a signal as to when it's ready to expand. I'll call it inhaling and exhaling. So the volatility is ready to expand again. Now, it doesn't predict direction, it only predicts movement. So at this point, I have overlaid some work that